What's up, guys? Welcome to the weekly forecast. What a beautiful, interesting, volatile trading week it was when the Federal Reserve cut the rates, however, disappoints the market by saying that this cut is just to control and manage the risks they face with the economy. They see uh, um, the impacts of the slowing down job market and still the unknown, uncertain pressure from the tariffs. How the Federal Reserve decides they will want to manage this risk. The market was anticipating something very dovish, I would say, where they will seem the Fed say it's time to cut and cut big, or give some hope that there will be more aggressive cuts. The Fed cuts 25 points, and basically that's it. They said the aggressive cuts are out of the equation at the moment. Things could change in the future, and the Fed mentioned they did it in the past. At the moment, it's not happening. That disappoints the market, and we saw the volatility is back in the game. So let's talk about the very interesting opportunities as we have them for the coming week. Gold is the first one, still facing the undoubtful overbought conditions here. However, on the other hand, the bullish momentum still continues. Monthly overbought conditions weekly is a potential bearish divergence developing here. While the market is making the higher highs, MACD making the lower highs, and so does the RSI. Well, the first high is coming from above 80, clear overbought condition. The interesting part, all that happens here with the range and breakout after 5 waves, which indicates that the peak is forming very, very likely. On the daily chart, we are facing similar bearish divergence on the moving average of the MACD, higher highs on the chart, with slowing down peaks on the indicators, and the 4-hour chart, that's where the fun begins from my point of view. We already faced one false breakout. What does that mean? While the market was trying to make a high, it instantly retraced back on a previously broken high. All that under a bearish divergence. The market made higher highs, MACD makes lower highs. Usually, this is a sign that more false breakout is coming, and here is one of the two scenarios that usually the price follows. The ideal scenario, we got another false breakout under the same divergence, and from there, prepare the ground for some significant correction. Very likely to be below the 36.25 and very possibly 35.75 down to 35.25 levels. The second scenario is we got complete the rally, and that's what happens. Between the first two peaks, we will face a bearish divergence. Between the next two peaks, we will not face the bearish divergence, but I'll mark it for in a red color for you. Between the two further, bigger swing peaks, there will be divergence. That situation is called fake convergence and usually indicates a stronger reversal in play. So the bullish momentum is here. The bullish momentum is real. Nobody denies that. But pay attention to the overbought conditions and the forming initial signs of fake highs. Usually that indicates that the buyers are getting tired. Next one is the S&P, another instrument on steroids. There are signs of slowing down, but the reversal signs are never given. And as long as, I said it on the previous week, as long as reversal signs are not completed, there is no need to guess when it is going to start. Let the buyers do what they have to do until the sellers show they are in the game. So what do we need to pay attention to on silver? That completes classical 5 waves, and if we connect the dots here, the resistance line indicators indicate the price will be the only one which dictates. Remember that. What does all that mean? We will need to pay attention to the price. At the moment, the sequence of higher highs, higher lows is there. is real, right? We cannot say that, look at the structure, how it changes, because it simply does not change. The momentum continues. But similar to the gold, as the size builds up, look what starts to build up here. We start to see some of these fake highs as they happen to be before. They happen to be here as well, here, before the next correction. Then another fake high before the next deeper correction. And as it builds up, the chances for something bigger coming in play as well. So here is what currently possible deeper correction is due. Euro dollar completes the rally to the 119, 120 level we've been talking about on the recent few weeks and bounces off this major supply zone. All that happens to be while the daily chart is forming its own, sorry, wrong image, or forming its own, as you can see, slowing down condition. Look what happens here. Fake breakout, fake high, under bearish divergence condition. Classical. And look at the candle patterns as we have them here. 3 lower highs, lower lows. That's a significant sign. 4-hour chart making the bounce of the overbought conditions, with the Federal Reserve disappointing the market. The waves down are built, as you can see here. So what is next with the euro dollar? I believe on the short term, the euro is heading to this zone, the classical demand area. We are talking about 116.75 down to 116-ish. I believe this is where the euro will very likely will have its first stoppage before some retraces and most likely further continuation down. What happens if the price makes the bounce already? Then pay attention to the current picks with the wicks, picks with the wicks, as you can see here, right? Wick sellers in control, and that's where the next bounce to the downside is very likely to. And the final one, Bitcoin, which has two absolutely classical price behavior. First of all, the major bearish divergence we are facing here on the weekly chart, which usually means a correction is due. The correction could be happening already, but in rare cases, we see something like that, like happened with the euro dollar before the next drop to the downside. So keeping that in mind, there are two scenarios I want to pay attention to. Scenario one, we got the bearish divergence here and the price flip. What do I mean by that? High, low, higher high, lower low, price flips. That now is bouncing off a supply area. Last high access supply, last high access supply. So that could be the case where the Bitcoin develops the second corrective wave, which should take us to between 105 to 100,000. A very possible classical scenario. On the other hand, remember I mentioned before there are two scenarios that could be simply a bounce before we got the final peak and another high on the MACD. Very possible scenario. And for that, if that happens, pay attention to this, the following. On the 4-hour chart, we got new high after breaking this high from the end of August. That means as long as the low, which is this recent low of the uptrend, as long as this recent low and the last low from here and here, as long as this zone holds, there is a chance that the buyers will find the comfortable bottom there, use that demand area and start pushing the Bitcoin further to the upside. So if this zone holds, the buyers could take the control and look for these areas as for potential buys, either short term or for the new high. If that level does not hold, there is a great chance we are going to see the Bitcoin doing the corrective move of two waves and then head to below 105, possibly down to 100,000. That's it for this video. I hope you find value in these trading opportunities. Like button and subscribe to this fantastic channel if you enjoyed these trading opportunities. Thanks for watching. Best to you and yours, and I'll see you soon with more. Bye for now.